Hey guys, I'm Tony. I'm really into economics, and I've always liked to see what were the effects of all the various actions that happen in government. And over the years, I sort of saw what was purely rhetoric and pretty much to stir away from economic ideology and focus on not what would ideologically work, but on what really works, based on the facts and based on the evidence. This is what this channel is going to be based on. All of my research will be on this channel for you to know what really does and what really does not work. Not only can we examine fiscal and monetary policy, but pretty much policies from various sectors that affect society as a whole. For instance, looking at cost effectiveness of, let's say, building a wall or a healthcare system, or even from privatizing prisons, which has ended up being more costly for society, and which has not been more costly over society. Economics can apply through various subjects, various industries. It's not really focused on money. Economics, in effect, is a social science. Not only can you study monetary economic effects, but also social economic effects. This is what this channel is going to be on. We need to center our policy based on fact and reason and not on fear, bigotry, prejudice, and divide and conquer means. We need to use enlightenment versus ignorance when wanting what's best for all of us and knowing what works and what does not work. It's what my channel is going to be about. But we are going to have a bubble happen in 2019. Number one, all the tax cuts are going to the wealthy right now. Aggregate demand throughout the economy is flat. In some instances, it may go down. So what is going to cause this crash to happen? Number one, the repeal of the individual mandate, yes, is going to result in increased healthcare premiums for the rest of us. Because here's what the individual mandate was meant to do. It was meant to solve the free rider program that hurts society today. A healthy person is going to want to gamble with their health and not pay insurance, but at the course of an event that they have not paid into and may have consumed all of their money, they may not be able to afford their treatment. Which what happens is that cost gets passed on to the other customers. This is what single payer is based on, and this is what the Obamacare penalty is based on. To keep people from not paying their own way and for hospitals having to carry costs to other people. It's simple as that. If you get rid of the individual mandate, then the free rider program is going to escalate. Many people are not going to pay a penny for health care, and in the course of an unfortunate event requiring health care, requiring treatment at the hospital, since they have not been paying into health care, the hospital, the insurance companies are going to have to pass on costs to everyone else. This is why healthcare premiums are going to go up by 10% as a result of the repeal of the individual mandate, which is what people have said right now, which is what reports have said right now. But let's talk about the tax cuts. Trickle-down economics has never worked. It is based on supply-side economics, where tax breaks for the wealthy and large corporations are going to result in job creation since they have more available capital to invest in workers and jobs. The general theory is that these tax cuts for the wealthy are going to translate into more jobs and higher wages for the poor and the middle class. But what supply side economics does not focus on is human nature. Human nature, people are greedy. They want to pocket enough money as they can. This is really the psychology of very wealthy people. In cases when they inherit wealth, they get really bored, and it really is an ego thing to have the most wealth between all of your other friends. When you're on top of the pyramid, you only have these few people left that you really are competing against. So they're really competing against each other to see who can be the richest between their fellow millionaire and billionaire friends. That is the reality. It really is a power trip for the wealthiest people. Also, when wealthy people are given tax cuts, wealthy investors, they will not invest unless there's additional demand. If you're given a tax cut, why would you invest when there isn't any additional demand to be created? If a business is given a tax cut, why would they hire someone else to sit around and do nothing? Businesses pocket tax cuts, but they only respond to additional demand. There is no reason to hire someone else unless there's additional demand that's not been met. Businesses only hire people when there is demand for something that they're not keeping up with. If demand stays flat or if demand is weak, then you wouldn't hire someone else. It doesn't matter how many tax cuts you're given. They will not hire someone else unless additional demand does. So the best way to stimulate an economy as a whole is to give the vast majority of the tax breaks to the middle class. When middle class get more money, they're going to spend it. The middle class spend a higher portion of their income than the upper class and the mega rich. 70% of our economy is based on consumer spending. The best way to stimulate it, the best way to flow money throughout various sectors of the economy is to give it to those who need it the most. In this way, the poor and the middle class are the real job creators because it is demand that creates jobs. It's more money spent on goods and services that's going to increase sales for companies that is going to facilitate demand that would not be currently, that business owners are not going to currently keep up with. These tax cuts won't stimulate anything. These tax cuts are going to create a bubble. Because we are near full employment right now, we only have temporary unemployment for people changing jobs. We're almost at full employment right now in our economy. So these tax breaks, these tax cuts are not going to stimulate the economy like they say they would. It is simple as that. Also, the Federal Reserve is a cartel institution that concentrates power to bankers. One way that they do to stimulate investment through artificial means is to alter the price of borrowing money, aka capital. So when the Federal Reserve and the bankers want to encourage investment in the economy, the central planners, they make interest rates artificially low. That would encourage investment and growth. Once the bubble hits, that is when they tighten credit, when they raise the interest rate. We are raising interest rates today. These tax breaks can't do much when capital is being more expensive to borrow from, and when the middle class is getting the breadcrumbs from the tax breaks. Demand stays flat. We're investing in these companies. We think they're going to create all these jobs, but money is more expensive to borrow from, and aggregate demand for the middle class is low. This is all a huge fugazi. It is all an artificial and illusory bubble based on illusory demand and based on conditions set by the Fed that not everyone understands. We are at full employment. Unemployment is bound to go up right now. These middle class tax cuts are temporary. If Republicans keep power all the way until 2020, 2024, and the current tax law stays the same, then we're screwed. We really are. It really is a scary time if the same group of people are still in power 8 years from now. Middle class will get breadcrumbs, health care, premiums are going to skyrocket. Student loans is where people's money may go towards, which is why there may be a bubble in 2019. We're at full employment. Credit is being tightened. We have an illusory stock market bubble being propped up, thinking that these tax breaks on the wealthy and the corporations are going to create jobs when it all goes towards their shareholders and stockholder dividends. Aggregate demand stays the same, so there's no reason for someone like Warren Buffett to invest unless there's additional demand. Get ready for the crash. 2019 is when it all crumbles down.